Chris Wood had to say. We spoke to him earlier in the day about his view on the Indian markets, and he says that India is one of the most exciting, or the most exciting emerging market, according to him.
Clearly, the victory in UP was of a far greater dimension than people were expecting. So investors will now conclude that Mr. Modi looks highly likely to win in 2019, and that will increase expectations that he can continue to implement his agenda, which I think is basically both promoting development and what I would call digitalization. It's also, though, I think just from a political perspective, an incredible story that Prime Minister Modi took this massive risk of implementing demonetization policy only a few months before India's most important state election. And clearly that high-risk strategy has now paid off dramatically.
Between India and China now, which market do you think offers a better risk-reward right now at current levels?
In the short term, China is way cheaper than India, so there's been a trade going on in China, and it can definitely outperform India in the short term. But in the long term, I'm very much structurally overweight India. I have more than 50% of my long-only Asia ex-Japan portfolio, which is like 25 stocks in Asia linked to macro themes in India, but I'm very much focused on the domestic demand story in India. Meanwhile, the key story in terms of flow of funds in Indian equities in the recent past has been the ongoing inflows into domestic equity mutual funds. So this market is being driven much more by domestic investors, not by foreigners, and that's a fundamentally healthy development.
You know, which is a good point, Chris, but at the same time, is there a risk of especially in these domestic stories, a bit of a bubble creation with too much money chasing too few stocks? I mean, you know, stocks like Maruti, banks, they have been some of your favorites as well, but these stocks have done well and are not inexpensive.
The lesson of the Indian stock market over the last 10, 15 years is that it pays off to buy quality, to buy expensive stocks. And it does not pay off to buy value cheap stocks, because in the best cases, the value stocks end up as value traps. The worst case, the value stocks end up as something much worse. In terms of many of the most highly rated stocks, they're in the private sector financial services area. And on that point, my one criticism of the Modi government since it's taken over has been the lack of progress in recapitalizing the state-owned banks. If we're not going to get the proactive recap, the state-owned banks will continue to suffer ongoing attrition. And the strategy seems to be now to allow the opportunity for the private sector banks to increase their market share at the expense of the public sector banks. And the exciting point there is that this represents a huge growth opportunity for the private sector banks. And their ability to grow market share has now risen dramatically, if not exponentially, precisely because of the arrival of the practical ability now to implement digital banking. So to me, these growth prospects justify the high valuations. So I'm not, while you can trade around technical levels, I'm just remaining structurally overweight this area.